See, we are used to a plethora of taxes in the indirect tax front, right from excise to service tax to VAT to CST and purchase tax and various kinds of levies of the central and state. So GST is a kind of a reform where it seeks to amalgamate and integrate all these taxes and tries to put them in one basket called as goods or services. Of course, it is not as if all the taxes are going away and becoming a single tax. We still have three kinds of GSTs, a CGST or an SGST or an IGST. To put it in a nutshell, in a simple form, if you're doing a supply within a state, you pay CGST and SGST. If you're doing a supply which qualifies as an interstate, you pay IGST. If you import goods or if you import services, you pay IGST. These are the massive changes that you will face as you go forward. Well, this is the change which is actually worrisome to many because, for example, let us say there is a service provider. He was used to filing 2 returns in a year. If you take a VAT dealer, he was filing something like 12 returns in a year. So we are going to change everybody's business in such a manner that the GST is going to be completely technology driven. It's going to be system based. To some extent it is fine, but to a large extent it's going to hurt a lot of people because they may not have any clue as to what is required. So for example, a person would have to go and file his details of supply online. He has to go and file his details of procurements online. He has to go and file his returns online, which means a billion assessees are going to access the portal at the same point of time, and therefore the government feels that the portal also cannot stand that kind of traffic. So they've tried to divert this traffic through this mechanism called as GSPs or GST Suvidha providers. So 34 as of now, plus some more are going to be identified as GST Suvidha providers. So they'll be the outer satellites or outer links whereby you as a businessman can go through the Suvidha provider, or there could be one more IT company, an ASP, who would provide a kind of a solution which will integrate your solution. So you go through the ASP goes to the GSP, and the GSP goes to the portal. The whole idea is to divert the traffic. But then the key question is all the GSP ready, or is the ISP ready, is a big question by itself. Today, if I'm a manufacturer, as soon as I receive a raw material, I take credit. I look at the excise invoice and take my SENVAT credit. In many states, if I buy an item for VAT purposes, I look at the invoice, I receive the goods, I take credit. GST is not going to be paper oriented. GST is going to be system oriented. Plus, it creates an additional pressure. For example, if I am a person who wants input tax credit, then it doesn't depend on me totally. I have to look at my supplier. I have to see whether he has uploaded this data onto the system. I have to see whether he has paid the tax in respect of the supply. I have to see whether he has filed his return. If all these things have happened, and I also have to ensure that what numbers he puts into the system matches with my number which I upload into my system as inward supply. If all this happens, then I'm entitled to credit, which means every manufacturer, supplier, every person who's a user of these services entitled to credit is going to be a worried person, because all the time their credit is going to be contingent upon supplier behavior, which is worrisome. To some extent there is some relief. For example, when you're going into a massive new system called as GST from July 1st, that's a cutoff date which they were given, there are a lot of stocks available in the hands of the dealer as on June 30th. So these stocks, to take a typical example, I could be a dealer of consumer goods and I have variety of consumer goods stock in my location. These consumer goods I have purchased from various manufacturers and they're lying in stock. I have documents. Now the document which I have will show probably an excise duty. If it shows an excise duty, I don't have a problem, subject to certain time frame as to how old the stock is. That excise duty will become GST credit subject to some compliance. But the reality is that the manufacturer may sell to the distributor and the distributor will sell to the dealer, in which case the dealer does not have a document which shows the excise duty. He has to pay central government GST. So what the central government said is, we'll try to give you some relief at that level. So if you don't have the invoice, what is your rate of tax? Your rate of tax is 18. Out of this 18, you're going to pay central government 9% CGST. So you first pay the 9% CGST when you supply those goods. Then we will give you 60% of that 9%, which means you may get about 5.4% back. Over a period of time, you should liquidate this stock and you should get back this relief. So you're going to pay 9, but you may get back 5.4. That's the whole idea behind this transitional mechanism. But it's come in too late. People have already started, offloading stocks. People have given massive discounts to offload stock. Dealers have stopped picking up material from distributors because they're worried. Everybody is worried. They don't want to hold the baby. So the distributor does not want to hold the stock. He wants to give it back to the manufacturer or stop ordering. The dealer does not want to pick up stock from the distributor. So there is some kind of unrest in the market because all of them are worried as to what cash flow pressure they will have and how much of credit they may really get. It's something they need to be worried about because it's a very simple logic. You are a registered person. You are into GST, you want to comply with the law, you are Pakka registered. You could be a hotelier, you could be a service provider, you could be a manufacturer, you could be a trader. Doesn't matter. And for your activities, you procure something from somebody, a supply. It could be commodity or services. The guy whom you're dealing with, the supplier, is not registered. Let us say he's a contractor or a plumber or a laborer or some supplier of goods. He is not registered. Irrespective of the value, because he is not registered, you should pay the GST. So the reverse charge works in such a manner that if you deal with an unregistered person, you got to pay the GST. You'll take the credit, of course, but there's a cash flow. So you have to pay the amount first and then take the credit. So, and also the fact that you will also get into classification. I have to decide whether there's a phone or a camera to find out the rate of tax. Those kind of things also I have to do and then take the credit. So reverse charge is going to create a lot of pain in the market because there could be people who are even well within the exemption limit and therefore they are not registered. But even then, this reverse charge applies is how I would read it, the particular provisions. So it's quite scary that reverse charge is going to bring in almost everybody into a tax liability which they would not fathom. See, let's say there is a kirana or a small shop, and this small shop has got a turnover of about 40 lakhs. Now, there's no point in him going into a normal system of GST, claiming the input tax credit and setting off and things like that. You will pay a very small nominal percentage notified, which is 0.5% CGST, probably 0.5, 1% effectively you might pay. And you won't get any credits. You cannot collect the tax from the customer. You cannot do what is called as interstate supply. So it's fine. That suits you, you will go through that. But if you're a businessman where your credits matter, your tax credits matter, you will say, no, I don't want this compounding, I'll be a normal assessee, I will file my returns, etc. So the kind of audience to whom composition would be very relevant would be people who don't need tax credit, people who are in a very small segment of 30 to 40, 50 lakhs, they don't really go, and they have probably an outlet or a particular simple segment. They're not going to do interstate supplies ever, they're going to just sell to people who are coming to their shops. Those kind of people would probably go into composition. Service providers, they've identified only for restaurants. So for restaurants, they pay a 5% up to 50 lakhs. So if you're running a restaurant which is up to 50 lakhs, and that is obviously, it's a very small turnover if you feel, then you can look at composition where your rate of tax is 5. But in case you're running a restaurant which is 51 lakhs, you are not entitled to composition. You will become a normal restaurant. Therefore, if you're a non-AC restaurant, you will have to pay 12% GST. If you're an AC restaurant, you pay 18% GST. If you happen to become a 5-star location, you pay 28% GST. If today the system is that the export of goods should take place or export of service should take place, the tax should never be exported. So with that philosophy, the GST also works, whereby exports would be zero rated. So if it is zero rated, I can manufacture a commodity, export it to, let us say, UK. I don't pay any GST, but I give a bond or security, whatever. And because I've exported, I'm entitled to claim refund of all my input taxes. If I feel that it is okay to pay tax, and then seek refund of the tax paid. So the idea is that you have a choice. You pay and then take your refund, or you don't pay and take your input tax refund. Oh, it depends on what kind of posturing you're trying to implement. If you want to say you're ready, then everybody say we are ready 1 year ago. If you're still not understood GST, then you'll say our team is working on it. But if you ask me honestly, the readiness is very, very poor. And one of the key reasons why people are not too ready is too many changes have happened in the way the law has flowed down the government has made available the literature in the public domain, no doubt about that. They have given all the information. But there's a vast, massive set of information which people have to digest very quickly, absorb, and relate it to their business transactions and try to implement it, understand it for themselves, and then translate it to the IT guys. Then the IT guys will have to develop business solutions, because most of the companies work on IT platforms, so you will be on an ERP or a SAP or an in-house platform. And then after all this will have to talk to the ASPs in terms of integration. The ASP has to talk to the GSP, and the GSP has to talk to the GST. So if you ask me about the IT part, they are really not ready. If you ask me about the awareness, yes, there is awareness because people are really aware. There is still this classification issues, but people are worried about the rates. For example, soaps. If you take soaps, the rate is 18. If you take shampoo, the rate is 28. So it does not seem like a very rational classification. So people are still hoping that it might come back. So everywhere there is a lot of issues. If you take a sports equipment, it could be at a lower rate. If you take a gym or a fitness equipment, it is a higher rate. So on one side we want people to be healthy, and we are looking at tobacco very negatively. At the same time we are looking at gym equipment also negatively. So we need to, a lot of these industries are all representing. So they're all hoping that something can happen because the meetings are still on. So they feel that the final rates could still have some change. So the rates are still kind of in a bucket where it can juggle about a bit. Plus understanding, and everybody is scared of change. It's human psychology that you don't embrace change so quickly. So a lot of them are worried because they don't want to change. So they're trying to hold on to their position, thinking that it will get postponed ultimately. But it looks like a very big reality, like a looming cloud coming over.